Okay, cool. Let's start off by explaining the change of character just before we jump on to the structure. Sorry about the bad audio, by the way, guys. Let's find a horizontal array, and if I'm speaking too fast for you guys, sorry. I need to make these videos short, but I'll try my best to make them to make myself clear and understandable to you guys. Okay, cool. We mark off the previous high, the pivot point. While we're marking off this, let's assume that price now is in these levels. So we don't know whether the price is going to continue to the upwards direction or to the downwards direction. So now we want to take a trade in this downtrend, but we don't know where to take the trade. But because we know the simple concept of structure that we buy low and we sell high, we're marking off this area as the previous what? The previous high. So what are we expecting to do here? Because this is support and resistance, this is a support and resistance area. If you're looking at it like so, this is a support and resistance area, making it a level of structure, meaning it's a crucial level of structure. Is it a strong level of structure? Will price hold when it gets there? We don't know, but we'll hope and pray to God that it will hold, because this is a downtrend. So what are we going to do when price gets here? If we want to take this trade, we'll take a sell once price gets to these levels. Cool. We understand that thing. Okay, cool. Now we let price move and wait for it to come back to the zone. Okay, cool. Price does come back to the zone. As you can see, but it does not only come back to the zone, it breaks the zone and closes above. You understand? Let's say, for instance, we took a sell, so we would have been stopped out here, obviously. Okay, cool. Now we've learned something. Price just broke this area, it closed above. Okay, what's going to happen? Second candle closes above this level. So what's happening here? Third candle tries to break, boom, closes above, makes a pin bar. Hey, okay, 3 candles closed above this level. So this means that price now is actually showing intentions of actually moving to the upside. Okay, so cool, let's look for buys then, because now we are seeing a change of character. So where are we going to take these buys? I just told you about order blocks. You see an order block in this zone right here. There's an order block here where price can be taken, with no doubt. We can take an entry there. We can take an entry there on that order block, or we can take an entry on this order block, because now we're seeing 3 order blocks here. Let me just take that there. We're seeing 3 order blocks. We're seeing this is a second order block, an area where we can take price. This is a third order block. This is another area in which price can actually come to. You understand? So this order block is only significant on the lower time frame. You understand this order block, because if you drop down to the lowest time frame, you will see that price is now creating those high highs and breaking structure. But for now, we'll look at this one because this is the order block that actually broke the structure. But because it's a change of characters normally move down to where? To the previous areas of support. So this would be an area of interest for us because it's a double bottom and it's support. I mean, yeah, it's a support area. So coming from resistance, we expect price to come there. Yes, price can bounce off from any of these order blocks. If you choose to take a trade here, your stop loss needs to be below the support here. If you choose to take a trade here, support, or your stop loss needs to be here below support. If you choose to take here, which will be the best, your trade, your stop loss should be below this support. You understand? Okay, cool. Now that we understand that, let's see what happens with this change of character. Okay, change of character decides to shoot straight down and nullify all our other order block levels. So all of these levels are now, they are violated in so many different ways. They are violated just with one candle. And this is the one that is respected because it is closest to structure. So these are the most valuable order blocks. If you're looking for an order block, oh sorry about that. If you're looking for an order block, like the best order block, you normally look for an order block that is closest to the structural area. You understand? That's the order block you can take. Okay, fine. This order block moves, boom, creates a bullish engulfing pattern. We could have found another entry somewhere here and moved it up. But okay, cool, it's fine. Now, what else are we seeing here? We're seeing another pivot point. A second pivot point has been created right above there. Okay, right about there, another pivot point. So now what are we expecting? We're expecting price to reach this level, either break and retest or bounce off and come back down. But because we already know that this is a choke, we're looking for price to actually break this level. So if we had a trade, we'll probably take it round about these levels. Why these levels? Because this is where price has been sensitive the most at. Let's mark it off right here, just so you can see what I'm talking about here. So as you can see, price is most sensitive, bouncing off, bouncing off. If we move this way, you'll see that it's been bouncing, bouncing, bouncing multiple times in this area. So this makes it our sensitive area or area of support. So if we took a trade on that premium order block or on that support that is here, we would take profits on this level here, or this level here, or this level here. You understand? That would be up to you. So now that we are now pushing to the upwards direction, we push, we break, let's see. Okay, drop, we're pushing now, we're pushing now, we're pushing. Okay, cool. Price goes to that area, breaks that area, comes back down. Guess where it comes to? It comes to a pivot point here. As you can see, if we move it a little bit, it comes here, and it doesn't only go there, it also mitigates an order block. Guess where that's order block? Where's that order block? Close to the area of support. Even here, it's closer there. So if you were support and resistance, you would have found the trade, and it would be a sniper trade, and you would be in like a fraction of the risk. You understand? How many pips is that? Let's see how many pips is that. I don't know. Okay, I'm just marking this area here just so you can see what we're talking about. Okay, cool. So you have found your entry here. Price would have moved in your direction, and so on. As you can see, as it continues, structure keeps getting respected. Let's see. This is another level of structure. Let's see. Let's push to the side. It consolidates, respects this area, consolidates, breaks to the upside. And here's another thing, guys. What is being formed here? What are we forming here? We're forming a pattern here. And with patterns, you must know they also fall part of structure because they create structure in order to move the market. You understand? Before price goes to a certain direction, it needs to create a certain pattern. It can be a double pot, it can be a double top, a double bottom, it can be a rising channel, it can be a flag, it can be whatever, any of those patterns that you guys learned on the basic. Price action will first show you those patterns and then lead you to the right direction. So in this case, we're seeing a rising channel, and guess what? We're seeing a level of support that is now being respected. And the support of this channel is also being respected because the pin bar just formed here. And I should have been in this trade, but I was actually distracted. Either way, a pin bar was formed and bullish impulse. Now, because this price reacted on these supports and created this candlestick, it shows us that yes, price is really interested in moving in an upwards direction. So what can we do now in order to capitalize on this trade? Now, say for instance, it's you in this situation, you've missed this trade. Instead of just jumping onto the trade like this, you look at your next entry. So where would my next entry be? So again, we go to the basics of support and resistance. We see that, okay, price has been respecting these levels here. Bam, 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 bam. So now it's in an area of consolidation. So in this case, price can do two things. Price can either break, retest, and move to the upside. You understand? If it does that, if price does break above, retest, and move to the upside, we'll look for what? We will look for buys. Let me just put this here. So we'll be buying this in these levels and putting our stops right here. Understand? That's where we'll be putting our stops. Yeah, sorry about that, I was drinking some water. So we'll put our stop there, take profit just above that level there. You understand? Because we know that this is also a level of resistance that will be resisted before price pushes to the downside. Or price could break below the structure, retest, and go down. You understand? So you can either sell in this position or sell in these two positions. But before you start to sell, this is an up channel. price needs to show you signs of breakage. So it needs to break. So if this decides to break, it will either come back to bounce off this area here, this support level here, and push down, or come back in this area here and push down. But regardless of whatever it is that it does, after the breakout, you take a short position here and you set your take profit on the 90% capacity rule. It's either this support or this support, but we'll choose this support because it's the one that has been mitigated. You understand? Where's your stop loss? Your stop loss is going to be above this area, right above this support. Why is your support there? Because price has a chance of also going to that level there. So price can also go up there to here. So it's up to you whether you want to take this entry because it looks like a very less risky entry, or you can take this entry here. It's all up to you at the end of the day. So that's basically how structure works, guys. You use support and resistance, you keep your patterns in mind, and always take trades according to your pattern. So let's say, for instance, here, okay, let me first make that explanation and then talk about this more. Let's say, for instance, this impulse had a flag. So let's say this was a flag coming to this area. We would know that just because it was consolidating to the downside, creating a flag, it would be easy now to take your trade here because now you know this level of structure is going to what? It's going to be respected. Or this order block here is going to what? It's going to be respected. You take your trades here, stop loss at the bottom, price moves to the upside. You understand? Now price is here. Now you can see that it's showing bullish signs. So you can't jump. Let me just delete here. You can't just jump into this trade just because it's showing bullish signs. Because why? Now you are late. Because after you should have taken a sniper entry here. For me, I should have done that or waited for this confirmation to be complete. But the other thing I would have waited for is I would have waited for this thing to come back 50% capacity of this candle, then take this trade before it moves down, just to reduce my risk. Someone else might take this trade here and hold it long term. But for me, I wouldn't do that because I buy low and I sell high. Let's drop down to a 15-minute time frame and see how this area is looking here. Just this area, how it's looking. 15-minute. Good. As you can see, you missed your entry here. Now you are seeing that price. Oh, price. It's already left me. You are on 4 hours. You are taking a trade here. Guess where you are? You are buying on resistance. So what do you think is most likely to happen here? Price is going to push back down and probably mitigate some areas. Say you came in with a large amount of risk, you'd be stopped out of that trade by margin call. You understand? So this is why I choose not to buy at these levels. Now I can see on the higher time frame price is buying. For me to buy now, it will have to break this zone and retest it. Then I can buy. Now I'll just sell this thing here, but I can't sell it now because this is an upwards channel on the higher time frame. For me to buy now, I would wait for it to come to this level and then buy. But I won't buy now because I can see that there was a W formation that was created and my level of structure is here. So if I was to buy, I would wait for price to come to this level here, to this level of structure here, retest and move up, or retest the neckline and move up. You understand? If it doesn't do that, then I'm not taking any buys after the break. So that's how I would have traded this. For now, I wouldn't trade this thing because it left me here. So I'll wait for it to break, retest, and then buy. Or if I wanted to sell, I would sell with the hopes of it going down. But that would be a risky trade because this is an up channel and it never showed any bearish sentiment. It's only showing me bullish sentiment now. So I'll wait for it to go down, break the level like I told you on the higher time frame, and then continue in the desired direction. So yeah, guys, that's structure for you. That's like Forex trading in a nutshell for you. But we'll talk about more things as we continue.